So I'm definitely a master of closing my trades too early. Even though I back tested my previous trades, what if I had let them go to expiry, all of them, and I saw that going to expiry would have made me more money than all this over management that I'm doing. I still did the same mistake again this week. It's not the first time I say this, but it's just hard not to close some trades that feel tested or are getting close. But I ended up doing a lot of mistakes this week that really disappointed me. And once again, if I had just let things go to expiry, I would have been way better off. So for this week, this closing week, I ended up with a $180 loss. And I'll go through my trades. Some of them, they were moved to next week because I actually rolled some of my trades. So let's just take it one at a time. So let's start with Shopify. All right, so Shopify was a put spread. It was initially a put spread at 10:20, 10:15 that I opened Friday, October 16. I collected, I believe, 95 cents. And then it was expiring this Friday. So it was expiring today, October 23rd. But then obviously, if you look at the Shopify chart here, let's bring it up here. If you look at Shopify, it completely dropped and even breached. So if I look at the chart 5 days, let's say, you can see that yesterday it went to 993, so completely breached my strike of 1020. So right now it's at 1018, so that's what's annoying. That's why I mean sometimes it's just best to hold till expiry. But yesterday when it dropped to 993, what I had to do is I sold a call spread to really reduce my max loss. So I sold a call spread at 1020, 1025, and the total credits received gives me 245. So I collected 95 cents from the put spread and then $1.50 from the call spread. So that gives me 245 total. So now my iron butterfly, so it becomes an iron butterfly now. So I collected $2.45. It's 5 point wide. So that means my maximum closing price to close this trade, the max I'll pay is $5. So that means my max loss is $5 minus 245. So that means my max loss is $2.55 times the number of contract I did, which is $1. So $255 is my max loss on this trade. Now, if we look at Shopify today, if I just held it till expiry, like I always say but never do, today it reached 1022. It reached a high of 1023.27. Now that doesn't mean that I could close the trade for a profit, but who knows? We still have 3 hours or 2 hours to go, and look at it trading at 1019. But I could have definitely closed it for something better than what I ended up closing it for. I ended up closing it for $4.85 this morning, just because I saw it drop to 9.90 as well this morning. If we look at the chart this morning, the low of the day was 9.96. So it looked like a max loss anyway, so decided to just close it. I ended up closing it for $4.85. So if I go back to my trade, so $4.85. So that gives me, after commissions, a loss of $255. And you could see right now it's at 1019.75, and look at this last day. It looks like it's uptrending. Looks like it might close above 1020, and right now it's at 1020.63. So once again, seriously, holding till expiry seems to be the key way to manage trades. Just hold to expiry. As long as you're confident in your entries, as long as they're fair entries to begin with, just hold everything till expiry. Let's just look what it's trading for right now. I had the 1020, 1015 put, and see the bid and ask is also very wide, so that's the problem. So you see it's trading between $0 and $3.40. So that means I could probably close it for about $1.80, maybe $2. I opened it for 95 cents, so I would still lose if I tried to close it right now. But the question is, what if I hold it till expiry and just see what happens? It would expire worthless, but at 2 o'clock, the broker will start liquidating options that are dangerous, that could get assigned or exercised. And since this is $1,000 underlying, 1,000 times 100 is what, 100,000. So it might be too much for my account. I think I have enough buying power for it, but it might be too much. So the broker might start liquidating automatically. So I probably wouldn't be able to go and hold it till expiry. So I would have to close it myself in about 30 minutes anyways. So maybe in this case, closing the trade early myself is not a bad thing, but it's just funny how things happen. It's just ridiculous. I'm 30 points away and I think I'm in trouble. And then if I just hold it till expiry, this is going to end up, it looks like it's going to end up out of the money today at the end of the day. Very sad, very sad. So now the other trade I had, this was a Google put spread I had. I opened on Monday, October 19 when things dropped. 1500, 1495 put spread, collected $1. And then I think on Wednesday, Google went up a bit to 1600 almost. So I closed it for 17 cents. So this was a good trade, $70 net profit after commissions. And here's another one that really annoyed me. I had a SPY put spread that I opened on Monday, expiring Monday, October 26th at a 338 short strike. I collected 80 cents. Market kept going up and down, up and down. This became profitable several times and dangerously in trouble several times. And then I ended up closing it yesterday for the exact same thing I got into it. So I decided to get rid of the trade as if it never happened, just because I was uncertain of what's going on. I mean, I saw the market go to 343, 345, 346, and then come back down to 340 right away. So that's what scared me when it dropped to 340. And then when I saw it come back up again to 342, 343, I decided to get out of the trade for 80 cents as if it never happened. But based on how the market is reacting today, this could have been profitable on Monday, or even today I could have closed it for a decent profit. So this is a missed opportunity because I took action too quickly. So I just ended up losing the commissions, basically $12.90. So this Tesla put spread was an earnings trade that I opened last Friday, that I opened on Monday. I opened 2 days early. Usually I like to open earnings right before, but this one I opened on Monday because I think Tesla had dropped on Monday. So I decided to get in while the Tesla had dropped. So I did a 390, 385 put spread, collected $1. Tesla ended up going up after earnings, so I closed it the next day for 6 cents. So that was a good trade. $81 net profit. Chipotle, CMG, Chipotle Mexican Grill. I opened this one on Wednesday, so right before earnings, at a 1265, 1260 put spread, collected $1. Now, after hours, Chipotle dropped to 1260, but then it opened on the next day. I think it was on Thursday. It opened on Thursday at around 1300 and then came back down to 1260 and then came back up to 1280, 1290. So it was trading at around 1280, 1290 for a while. So I got scared. What if it drops? The bid and ask were very far apart. I decided to get out of the trade just in case, just so that I don't have to deal with something messy. And I closed it for $1.50. So it gave me a $50 loss, or $62 with commissions. Now, if you look at CMG right now, if we look at where it's trading at 13.15, so way above my short strike. And if we look at the vertical spread that I had, so let's see what it's trading for. I could have closed it for 5 cents today. So it was 1265, 1260. So it's trading for right now somewhere between 0 and 45 cents. So I could have closed it for about 20 cents. I'm pretty sure this morning I saw it trade for 5 cents. So as you can see, this one would have been very profitable as well. If I just held on to it. I could have let it go to expiry, but just in case, I like to close my trades just in case. So this one would have been a profitable trade instead of a $62 loss. So that gives me all around $180 loss for the week. Now if I go back to Shopify, let's just see what it's trading at. It is trading at 10.18. So it's kind of annoying. It's kind of scary. You have to take action. You can't just let it be like that. But I don't know if I took the right action. We'll see where it closes at the end of the day. Let's look at what it's trading at again. So 10.15. You see the bid and ask is so far apart. So now it looks like I could close it for $2.50. Whatever. Maybe I ended up doing the right thing. We'll see. Actually, I don't think selling my call spread was a bad thing. What I do think is closing it early this morning was a bad thing. I could have waited till end of day. I could have probably closed it for maybe $3 or $3.50 and would have lost less. I could have even closed my call spread this morning when I saw that Shopify was at $9.95. My call spread was almost all profitable. I could have closed it and then let this trade go back up, and then because the put spread would have been a complete loser anyways. So I could have just either pay max loss or wait to see what happens. And in this case, Shopify went back up. I probably could have closed it for, right now we can see that I could close it for $2.50. So I would have made money from the call spread, and I would have lost about $1.50 on the put spread. So I would actually end up maybe at break even or maybe a small profit with this trade. So I don't mind. I don't think I did something wrong with the call spread, but But definitely I could have waited a little bit later in the day to close it instead of closing it early in the morning today. So now if we look back at, if I go to my account just to look at orders executed, so you could see Shopify, where's Shopify? I closed it for $4.85. It got filled at $4.85. If I look at executions, Shopify, you can see the call spread. Here's the difference. So the call spread was I closed it for 20 cents and had opened it yesterday. Where's the Shopify call spread? Let's filter on Shopify so it's easier. So Shopify call spread, as you can see, I collected $1.50 and I closed it today for 20 cents. So the Shopify call spread was all profit. The problem is the put spread. The put spread is what I ended up paying a lot for. Now let's look at the trades that I had this week, but I ended up rolling. So one of them was the Netflix here, 485, 480. So this was a trade that I opened last week, and I opened it for $1, 485, 480 put spread, and then after earnings, Netflix dropped. And it's so annoying. I actually had the chance to close it for about 75 cents, but I mean, for $25 profit after commission, even I felt it wasn't worth it. So I wanted to hold on to it. I mean, Netflix was trading at 500, so I had a good feeling that it would stay above 45 by Friday. So I just kept it, but then it decided to drop completely. So I rolled it. I ended up rolling it. I didn't close it for a loss, but I ended up rolling it till November 20th. So you could see November 20th right here is the new expiry. I kept the same strike. I had collected $1 initially, and then by rolling it I collected 60 cents. So right now I've got a total credit on this trade for $1.60. So that means my max loss is basically $5 minus $1.60. So my max loss is $3.40. But I have until November 20th for Netflix to be above 485. So it has a good chance. And if it keeps dropping, then I'm going to sell call spreads against it and reduce max loss even more. But let's go see what Netflix is trading at. Let's see if I did the right thing rolling it. I have a feeling it's going to also close above 385. Just my luck. And there you go, 485.96. So right now it's trading above my short strike. Who knows what it closes at? We still have 2 hours and a half to go. But knowing my luck, I'm pretty sure it's going to close above 485. But as you can see, it had a low today of 481. So it's normal for me to panic and take action. But what I could have done is kept it. I could have sold a call spread at 485, turning this trade into an iron butterfly. So same thing like Shopify. And then I should have done that this morning. And then when right now, with 2 hours to go, Netflix is trading at 486, I could probably close the iron butterfly for less than what I collected and actually made a profit on the trade. So actually, let's go see what the Netflix put spread is trading at. So 485, 480. So just to see what it's trading at right now, let's say I only had the put spread that I collected $1 on. I could close it for exactly what I collected. So if I just held on to it without selling a call spread, I could close it for what I collected, and as if the trade never happened. So okay, but what if I had done the call spread as well? So I'm gonna add the call spread at 485 and 490. Let's say I had collected $1.50 from the call spread, and right now let's see what it's trading for. So right now it's trading for $2. I could probably close it for $2.40. So I would have collected $1 from the put spread. I would have collected $1.50 from the call spread. So that's $2.50. Right now I could close it for about the same thing. So either way, it looks like I could have closed this trade for break even instead of rolling it. Rolling it is not a bad thing. I mean, I got a credit and I could still potentially win on the trade, but I had to go all the way to November 20th and I missed out on profits that I could have taken this week. So that's just the thing I don't like about rolling. I don't care that it's actually taking capital because I have enough capital. I'm not even using all my capital when I'm trading anyways, but it's just annoying that if I just stick to my hold till expiry theory, I could end up winning on most of these trades instead of panicking and managing them too early. So yeah, 485.4, and if it closes at 485 exactly and I had an iron butterfly, I could actually make even more from the iron butterfly. I could potentially close it for maybe 50 cents and make a $2 profit if I had sold the call spread. So definitely I'm not proud of my management, that's for sure. Now let's look at my other trades. So I had this one that I rolled. I had an Amazon put spread. There you go, this one here. So this one was for this week as well, 31.30.95. This one was for this week. Amazon dropped yesterday. So if we go look at the Amazon chart, Amazon dropped yesterday, 5 days. So Amazon dropped to 31.23. My short strike is 3100. So panicked once again, decided to roll it to November. Right now Amazon is at 31.63. So it looks like it would have expired worthless. I would have won on this trade, or I could have closed it for a profit right now. So I ended up rolling it for 80 cents. I had initially collected $1 from the first put spread with October 23rd expiry. I rolled it to November 20th expiry, collected 80 cents. So now my total credit for this trade is $1.80, and I have until November 20th for Amazon to be above 3100. And I can close it either between now and November 20th. I'll try to close it maybe for less than maybe 80 cents, or maybe I should just go to expiry like I always say to collect full profit. But I mean, if I have a chance to close it for 30 cents, 40 cents before November 20th, I don't have to wait till then. I'll try to close it. So it has earnings next week, so we'll see what happens. I'm sure that'll help me. If it has good earnings and the stock goes up, then I'm pretty sure I can close the trade early. I don't have to wait till November. And so let's look at what the put spread is currently trading at for Amazon. If I wanted to close it right now, let's say if I still had the put spread on Amazon and I wanted to close it right now before 2 o'clock so that the broker doesn't take action and close it for me, 3100, 30.95 is trading for 16 cents. What amazing. I could have closed it for 10 cents today instead of rolling it till November for an extra 80 cents. So it would have made my profit this week instead of waiting till November. So this $180 profit loss could have been way different. I could have kept CMG, it would have made a profit on that. So that's an extra 100. So probably could have made 100, or let's say 80. And then this 80 was on Tesla is valid. So 80, 80, 160. This one I could have probably closed for 20 cents today. So 160 plus another 60 would have been 220. And then Google 220 plus 70, so 290, let's say 300. Shopify I think would have been a loss either way, so let's just say I think would have been a smaller loss. So what am I at? I'm at 320, so 320 minus let's say 100, so I'm back down to 220. This Netflix I would say would have been a break even if I held on to it, or even a winner, who knows, but it looks like it could be a winner. But I probably would have sold a call spread, so let's say a $50 winner. So it would have been at about 270, and then Amazon would have been a winner, so about 350 from Amazon. So, and then I had a put spread on SPY as well that would have been a winner, was an 80 cent, probably would have closed it for maybe 10 cents. So around $400. So from $400 to $400 profit. So this week could have been from $400 to $500 profit. Instead ended up being a $180 loss. Ended up being a $180 loss just because of my over management once again. But yeah, so I ended up rolling it $1.80. Now I have to wait till November to close the trade, or after earnings, we'll see. And yeah, and then the SPY 340, I did the same thing. I had a 340, 335 put spread on SPY expiring October 23rd. Had collected 80 cents, ended up rolling it for an extra 50 cents. So now total credit on the SPY put spread is $1.30 for 340, 335 strikes. And I have to wait until November 20th. So I need SPY to stay above 340 by November 20th. If it starts dropping below, I'm going to start selling call spreads against it just to reduce max loss. As we sit right now, my max loss on this is $5 minus $1.30, and on Amazon it's $5 minus $1.80. So it's not bad. I just have to hold on to it and hope for the stock to come back up, or it is already up. I could have closed it this week if I had kept it. So yeah, so that's the story of my life. And let's look at the trades that I have open right now. So if I go to my positions, so I have this one that I just mentioned that I rolled till November 20th, Amazon put spread 3,100. I've got an earnings trade, I guess, for next week. I placed an Amazon put spread at 28.90, 28.80 put spread. So this is 10 point wide. Collected $2 for that. So the difference between these two premiums here, I collected $2. You can see that the premiums have already dropped, but not enough to close the trade, but they've already dropped in value. Actually, let's see what it's trading for right now. So it's trading for about $1.50. So I could already close this trade for $1.50, and actually now it's going back up again. No, so forget the $1.50 now. But yeah, so if Amazon has good earnings, or even if it doesn't have good earnings, but it stays above 2,900 or 2,950 after earnings, then there's going to be a volatility crush and I can close this trade for a profit. This is for next week, 28.90. I've got an Etsy, also it's an earnings trade for next week. I did them early just because they dropped. Yesterday when a lot of stocks dropped, I decided to sell put spreads on them. These are the ones that I caught actually. I had orders on more things, but these are the ones that I was able to get in. So Etsy 120, 115 put spread for October 30th. I collected $1, and as you can see, it's already somewhat profitable, but obviously not enough to close. And this one I just did today. MasterCard put credit spread as well at 317.5. It has earnings next week, so we can consider it an earnings play. Collected 90 cents, and it's trading for somewhere around that as well. I've got the Netflix put spread that I said I rolled till November. So same strikes, 485, 480. I rolled till November. See, Netflix now is below 485. So it's hard to hold till expiry when you see this happening, right? But definitely I would have sold a call spread when Netflix was at 481. And I think my Iron Butterfly would have been profitable. So that's probably something I would have done. And then I have another Netflix. When Netflix dropped a lot, I sold another put credit spread for October 30th. So when it dropped after earnings, I decided to get into another trade on Netflix for next week though. So October 30th expiry. I probably could have gotten a better fill because Netflix dropped more after I placed my trade. So my short strike is 465. Collected $1, and as you can see, it's somewhat profitable right now. Okay, so it's not bad. I've got this naked put on Rocket that I just keep rolling. It has an expiry November 20th. So November 20th week should be fun. If I hold everything till November 20th, a lot of my trades should expire. If the market's trending upwards, I should have a good week on November 20th. That's if I don't close my trades earlier. Probably I'll close them earlier. I've got this SPY put spread at 340-335. So that's the one that I rolled as well. And actually, so the reason I decided to change the way I enter my trades and just put all the credits together, just so I know how much I should close a trade for. So SPY, my total credit received is $1.30. So if I go back to my trade on Questrade, I can see it's trading for $1.50. So I could close it right now and I would take a 20-cent loss. But at least I know where I stand. So I want this to drop below $1.30 so then it becomes profitable. For example, on Amazon, if we go to Amazon, where's Amazon? So if I go to my trade log, Amazon collected a total $1.80. So if I go to Questrade, Amazon November 20th, let's see what it's trading for. It's trading for about $2.50 about. So it's not ready to be closed yet. And if we look at Netflix, which is the other one that I rolled, where's Netflix here? 485, 480. Collected a total of $1.60. If I go to Netflix now, this one definitely is not ready to be closed. It's trading for $2.40. So you see this one's not ready to be closed. So that's the advantage of combining my credits into one line. So it doesn't show that I had that these trades existed in this week, but I just combined them so I could see how much total credit I received for the individual trades. And if I go back to Questrade now just to see what else I have open right now. So we did Rocket, SPY, and so Tesla was the trade that I opened today when it dropped. I went at a 390, 385 strike for October 30th for next week. So basically the same trade I had on for earnings, but I placed it after Tesla dropped today. I collected $1, and let's see what it's trading for right now. See, it's already somewhat profitable right now, so that's good. But I'm gonna hold on to it till next week. Hopefully the market doesn't betray me. But if it does, I'm going to sell more put spreads, and I'm going to manage the trades that are breached by selling call spreads. I think that's what I'm going to go for right now, and obviously try to go to expiry as much as possible, even though I seem to have a hard time with that. And I had a put spread on Zoom that I opened I think on Thursday when everything dropped, either Wednesday or Thursday. So I went with a 475 short strike. So my strikes are 475, 470, collected $1, and you can see that it's somewhat profitable right now. So it's trading for about 90 cents right now. But it expires October 30th. Now next week is a crazy week. There's a lot of earnings next week. Here, let's go to Finwiz. I like to use Finwiz just to see what earnings are coming up next week. Screener, let's do market cap over 10 billion, and let's do earnings date next week. And let's go with the highest market cap first. So you've got Apple, we've got Microsoft, Amazon, Google, Facebook, Visa, MasterCard. So I already have a trade on MasterCard. I already have a trade on Amazon. I want to get on Google, but it went up already so much. And I usually like to do the put spread. I don't like to do the call spread. We've got AMG, and we've got Shopify. I have an order on Shopify, but Shopify decided to go up right after it reached $9.95. I decided to place a put spread, but then it just shot up. So I missed out on getting a good entry on put spread. On getting a good entry on Shopify with the put spread. So I think there's potentially 25 trades that I could do next week with earnings. Boeing, I've got a trade on Boeing, but it didn't get filled. I'm trying to catch them at a low, of course. ServiceNow should be a good one as well. Caterpillar. Now, if we look at the earnings, the ones that have earnings next week but actually dropped today, so see, most of them went up. So we've got potentially the ones that have dropped today, MasterCard. So that's the only one I did. Honeywell, I think I'll wait till next week to do it. And I'll try to do weeklies, but if the weekly I don't get enough premium from the weekly, I'm going to go all the way to November 20th on the trade. Because even if it's November 20th, there'll still be a bit of a volatility crush. And if the trade goes well, I can still close it. And if it doesn't go well, at least I can manage it better. All right, so just wanted to share with you my trades, my thought process. Let me know what you think in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.